Hi guys, welcome back to another episode of the Fire Me channel. It's been way too long since our last video. I'm way behind on making some of the stuff that I was planning on previously. So what we're going to do today is we're going to review our 2020 portfolio results. This has been a crazy time during COVID and all the rest of it, but I was hoping we'd be back at the office so we could actually put this stuff up on the big screens and watch that. For me, I'm still working at home. I know lots of you guys are as well. But let's go ahead and review our portfolio and see what how we're currently doing here. All right, so the first stock we're going to talk about today is JP Morgan. As you guys know, this is my favorite bank. Today we have only acquired one share for $99.19. Current price is $141.25. So that's a net gain of $42.06 or approximately 42% return. This has been a great investment. I think I've said on previous videos, anything under $100 for JP Morgan I really like. But basically, this is just the best of breed bank. Can't go wrong. And as the future of banking goes into things like tokens, like Bitcoin, Ethereum, and other like banking tokens, JP Morgan was actually initially against this, but now they are developing their own token. I don't think it's going to be like a quote cryptocurrency, but that is the future of banking. And the reason why these tokens are so valuable is because they eliminate the clearing time. So historically, when you've sent money from point A to point B or across to Europe or someplace like that, the banks take up to a week or more to clear the transaction, make sure it's all there, whatever. With these tokens, apparently that can happen basically instantaneously. So I don't really understand what the difference is between electronic transaction and using a token like a Bitcoin type of thing, but apparently it's going to revolutionize the banking industry, and JP Morgan is in on that. So I'm into JP Morgan for the long haul. This has been great. I only wish we had more money earlier so we could have bought more, but so far so good. 42% return is pretty good for banks in a very short period of time since we've owned this. All right, next company, Ventus. So Ventus, as most of you know, is a long-term, or they're not a long-term care facility, but they own the properties that long-term care facilities lease and operate. They also own other commercial assets such as research buildings, which I guess in this time of COVID is even more important than ever, but they're just basically into commercial real estate. And like we said before, the thing that's really good about their model is for these old folks' homes, when they find someone to operate them, basically any of the maintenance and upkeep the tenants have to pay for. So Ventus really just collects probably a little bit of reduced rent and leaves all the building maintenance to the actual operator, which greatly reduces their risk, in my opinion, to some of these commercial properties. And it's a great business model. Right now, because a lot of these seniors have passed away or their families have pulled them out of these old folks' homes, that's kind of hurt the business a little bit. But we've got our 3 shares of Ventus, an average of $52.43. Current price is $50.72. So net loss of $5.14 or 3.27%. I'm actually thinking we should probably add to our position at this time as well, because once the vaccine is widespread and implemented, their business should rebound fairly quickly. And people are still going to get old no matter what the condition of the economy is as well. So I think long term this is a great company, and I expect in the near term, in the next year or two, this small loss will turn into a relatively good gain. So anyways, that is Ventus, and we'll move on to the next one. Okay, Delta. Oh, this is by far one of my favorite reopening trades. So we've purchased a total of 3 shares to date for an average of $41.27. The current price is $43.29, so that gives us a net gain of $6.06 or 4.89%. Now, Delta is a best-of-breed airline with the best balance sheet. Like all the other airlines, they've had to take on massive amounts of debt, but as soon as these vaccines get widespread implemented, which is happening at a very rapid pace right now worldwide, I expect this to start cracking things wide open. People have a lot of pent-up demand for trips, to go places, back to Disneyland, all these kind of things. So I'm very bullish on Delta. Delta's another one that I'm thinking maybe we should add to our position now while the price is still a little bit repressed. I think a fair price for Delta is at least $50, if not better. We'll have to see how they come out of this. I know all these airlines, their balance sheets took massive hits during the COVID lockdowns. So we'll see before we add to our position kind of where things are at with that. But I'm actually fairly impressed that we're up by almost 5% on this trade, considering it was a stock that got hit very hard during this whole pandemic. So anyways, that's Delta. We're up 5%, so not too bad for a company that's been hit exceptionally hard by COVID. Chevron. All right, again, best of breed in the oil business. So we've purchased 2 shares for an average of $99.90. The current price is $92.55. So it's a net loss of $14.70 or 7.36%. Short term, painful. I actually thought the price of this would be quite a bit higher, considering oil has gone up with Biden, but the whole world is against oil right now, specifically the Democrats, who are in power, of course. They're pushing down, they're repressing drilling, which is ultimately going to lead to price increases for crude. And even though everyone loves the electric cars and the idea of reducing the amount of fossil fuels, it's going to be a long ways before we can totally get off of oil or reduce it to a significant, or reduce it by a significant amount that we won't actually need oil companies and drilling and good oil reserves. So long term, you know, Chevron probably needs to change their business model, but for the next 10 to 20 years, I think they probably still will have fairly significant demand. And I still think anything under $100 is a good value for Chevron. This might be one where we can average down as well and expect to see good returns in the relatively near term. So most people aren't bullish on oil right now, so I'm reluctant to buy more of it, but this is a decent price for Chevron. All right, a crowd favorite, one I wish we would have bought way more of. I did think we were too expensive when we bought this originally, but apparently we should have bought way more, and that is Apple. So originally we purchased 1 share of Apple, but it split into 4. Had a 4-for-1 share split, and that led to an average price of $79.93 per share. The current price is $135.37, which is a net gain of $221.76 or 69.36%, which is unbelievable. We haven't really owned this stock for a long time, but with this whole lockdown, people being stuck at home, I guess, you know, people are really just buying more devices, being entertained more with their online streaming. Apple's services have taken off. You know, they're doing all the things right in all the right areas. They really know their market. And once people are locked into their ecosystem, it's very unlikely you're going to switch and overnight and go to like Google, for instance. Because if you've bought all these Apple or iTunes movies and music and whatnot, you're not going to give up your library to switch users or providers. So I think they've got a long-term, very strong business. They're a very innovative company, and 70% return essentially in a very short period of time. I hope it doesn't have a major drop once the reopening of the economy happens, but if it does, we're just going to buy more. It's just such a good company. So that's Apple, one of our best performing stocks to date, and hopefully it keeps going. All right, another favorite of mine. We've talked about this stock a lot on this channel. I wish we would have had more, but having a small portfolio, you know, we could only do what we can do. But Virgin Galactic. So we've purchased 2 shares to date for an average of $19.85. The current price is $54.53. So that is a net gain of, I think this is wrong. I've got $69.36, but that can't be right. Net gain is about 40, I'd say let's see here. About $50 is our net gain. So that would give us just over 100% return on Virgin Galactic to date. So huge returns. I love this company. It definitely is the future of aviation. I don't believe space tourism is their long-term business. Really, it is going to be the orbit, but basically flights in low orbit from point A to point B, such as the one example I always use is US to Australia. Today takes approximately 24 hours to fly there, or slightly less or slightly more, I can't remember, but it's basically a full day flight. If Virgin Galactic perfects the low orbit intercontinental flights, that same trip would take between 3 to 4 hours. So huge savings in people's time. More than likely the environment wins as well, because the amount of fuel consumption will be significantly lower than it is today to make the same flight for the same distance. Hugely innovative company. They've got lots of stuff in the works. Another, I don't know if it's going to be under the Virgin Galactic brand, but at Virgin Orbits, they haven't come public yet, but basically they would be a competitor to SpaceX, launching commercial satellites into space. That business is going, it's highly anticipated for the IPO. I'm not sure when they're going to take that public, or if there's plans to. I'm sure they will. If that company goes public, we are definitely going to be buying some of those shares. For those of you that follow the finance news at all, kind of one of the ARK investor, Kathy Wood, probably one of the most famous, I shouldn't say famous, but one of the most notable managers, money managers there is in Wall Street, has called a lot of these tech plays, and she started a space ETF. So she's bullish on the space, but the one thing that's good about that for you and me is that is going to drive a lot of order flow. So as more money comes into her fund, they're going to have to buy more assets, which means it's going to put upward pressure on the prices of these companies. So Virgin Galactic is doing great. They're well capitalized. Recently, they delayed a launch of one of their test flights, and the market dropped. To me, that was just a huge buying opportunity. Like, these guys aren't releasing an iPhone. These guys aren't releasing some consumer product. This is literally rocket science. So, you know, if they delay the launch of a flight, they're like, really, who cares? They're going to make sure this thing is going to be successful and safe, versus just put it up there because they had a date hanging out over their heads. So I don't see this as being a major setback. In fact, I think if you were to buy this stock on this pullback, as soon as they announce the new date for the relaunch, it's just going to jump back up. And I really do think Virgin Galactic is going to be the Tesla of space. If SpaceX doesn't come public, Virgin Galactic will be so far ahead in the whole race that it won't even be funny in terms of investors. But this whole space and aviation sector, I'm really bullish on, specifically on companies like Virgin Galactic, and hopefully SpaceX and Virgin Orbit's go public as well, because I'd love to own shares in both of those companies. And you know, if Elon Musk owns SpaceX and it goes public, it's going to go through the roof just because he owns it. So that's Virgin Galactic. All right, so in summary, we have a total of $939.51 invested. This is all US dollars. The current value of our portfolio is $1,258.92. So that gives us a total return of $319.41, or approximately 34% overall on our portfolio. Now, most of these gains were driven by just a couple of companies. Some of the, I'm going to call them the blue chips, like the slow and steady eddies. Most of them gave us a little bit of a return, but nothing like some of these high-flying tech companies that are out there. We're going to keep monitoring the portfolio, of course, and keep growing it. We have been adding a little bit of money here and there due to from the Cut the Cup challenge, where we basically put the money we would have spent on coffee into the portfolio. So that's really how the portfolio value has been increasing outside of these returns that we've been investing in. So far, so good. I hope you guys have enjoyed the video and following along. What's your guys' pick? Put it in the comments below. I'm always looking for new things to invest in, but I'm really excited about this year. I'm really excited about this vaccine coming out so we can get back to life as normal. And we'll see you guys in the next video.